Hello everyone, welcome to EduTap and welcome to today's session. So today we are going to discuss a very important report that has been released by the Reserve Bank of India. So the report is of the Interdepartmental Group of Reserve Bank of India on the internationalization of INR. So I hope you all understand that how important this topic is, and today we are going to understand the highlights of this report, the complete understanding of this report from which direct questions can come in the objective part of the examination, as well as the insights that has been provided in this report are very important from the descriptive answer writing point of view. So let's have the complete clarity about this report, but before that, do subscribe to our YouTube channel and join our Telegram channel for the PDF of this session. So now coming to the report of the Interdepartmental Group on the internationalization of INR. This was released in July 5th, 2023. That is very recently only. But let me tell you that this report was completed in October 2022. Okay. And this report is based on the Vision 3 of the Utkarsh 2022. So the Utkarsh 2022, or we can say the Utkarsh, is actually a living document that provides the medium-term strategy framework to the RBI, that what strategy should be adopted by the RBI in the coming 2-3 years. Okay, so the Utkarsh 2022 was released in 2019, July 2019, I guess, and in the December 2022, the Utkarsh 2.0, that is the recent Utkarsh, has been released. The recent medium-term strategy framework has been released, and this is the medium-term strategy framework for 2023-2025. Okay, so but remember that the report depends on the Vision 3 of the Utkarsh 2022, as this report was completed in October 2022. Till then, the Utkarsh 2.0 was not released. Okay, and the Vision 3 was what? It was enhanced relevance and significance in the national and global roles. So this is one of the visions of the Utkarsh, that is the medium-term strategy framework for the Reserve Bank of India, and that provides the 6 visions to the Reserve Bank of India, to the RBI. And one of the vision is enhanced relevance and the significance in the national and global roles, and for this the report has been released by the Interdepartmental Group on internationalization of INR. So to examine the issues related to the internationalization of INR. So internationalization of INR means that we want to use the rupees for the cross-border transactions. Till now what happens, that if we are buying some machinery, or we are buying something from the other countries, so we have to pay in dollars. Okay, the rupees has to be converted into the dollars, and the dollars are paid to the other country or to the seller. So the seller needs the money in the dollars, so that the dollars can be converted into the currency of the person's country. Okay, so the rupees cannot be used for the cross-border transactions till now. Okay, the rupees are not being used because the rupees is not considered a hard currency. It is not considered a very trustworthy currency, while the dollar is the hard currency. It is considered a very trustworthy currency. So we had to use the dollars for all the cross-border transactions, and now it has been said that the India has been trying for past 1-2 years to bring the internationalization of INR, so that the INR can be used directly for the cross-border transactions and the usage of the dollars can be reduced. Okay, and suggest a way forward. So to examine the issues that are related to the internationalization of INR and suggest the way forward, Shri T. Ravi Shankar, that is the Deputy Governor of the RBI, constituted an interdepartmental group in December 2021 that was chaired by Shri Radha Shyam Ratho, who was the Executive Director. So remember that when this IDG was made, it was in December 2021 and it was chaired by Shri Radha Shyam Ratho. Okay. Now, the objective of this interdepartmental group was to review the existing position of the INR as the international currency. So, where is our position in the international currency, we can say, and to frame a roadmap to provide a strategy, to provide a path for the internationalization of INR. Okay, so that was the objective of the interdepartmental group. So these are the things from which the direct question can come in the examination. You have to remember the chair person. You have to remember the objective of the interdepartmental group and under which vision the report has been prepared. So under Vision 3 of Utkarsh 2022, the report has been prepared. Okay, so now coming to the Utkarsh 2022, I have told you it was released in July 2019 and it provided the 6 visions to the RBI, okay, that the RBI should be achieving in the coming years. And the Utkarsh 2.0, this was released in December 2022, and the Utkarsh provides the medium-term strategy framework to the Reserve Bank of India, and the Utkarsh 2.0 is the latest one. Okay, it is for the period of 2023-25, and the 6 visions are same for the Utkarsh 2.0 also. Okay. So now we have discussed the Utkarsh 2.0. If you want, you can watch the video regarding the Utkarsh 2.0. Now coming to the highlights that has been provided in the report. So India's external sector has shown remarkable progress in the last 3 decades. So the liberalization, privatization and globalization, this was achieved. This was the economic reform that happened in India in 1991. Okay, and the globalization, that means we opened our gates for the import and export, for the cross-border transactions to happen more freely. So the globalization, this happened in 1991. The liberalization, that is the foreign investment can easily come into our country now. So for that also the liberalization happened. So the external sector has shown remarkable progress in the last 3 decades after the economic liberalization reforms that were set in motion, so that the foreign investment can easily come into our country and the cross-border transactions can happen easily. Over the years, the linkages of the Indian economy with the rest of the world in terms of the trade and capital flows have increased. After the liberalization, privatization and globalization, there was the linkage of the Indian economy with the world that has kept on increasing in the years, over the years. Okay, in the last decade means last 10 years, the India's foreign exchange reserves have grown from USD 2090.5 billion in August 2012 to USD 560.4 billion in August 2022. So this is the 10-year data that you can remember, that you can quote in the examination. And what is the recent data, that also I am going to show you, that in June 2023 the foreign exchange reserves that were with India were US dollar 595.1 billion as on June 2023. So this is the recent data. Okay, during this decadal period, that is during the past 10 years, India's foreign direct investment, that is the foreign direct investment that is happening in India, has increased from USD 46.6 billion to USD 84.8 billion. Imports have increased from USD 489.3 billion to USD 612.6 billion, and exports have grown from $306.0 billion to $421.9 billion. So you can understand that in the past decade there is the linkage that has increased of the Indian economy with the rest of the world, and there is more and more need of the rupees to be utilized for the cross-border transactions. Otherwise we will keep on using and keep on needing the dollars reserves for the transactions. Okay, and that can become very harmful for our country, as we require the huge foreign exchange reserves, huge number of the dollars. Okay, so the foreign direct investment flows, the current data is 28.0 US dollar billion. Okay, so the net FDI was $28 billion. Okay, so meanwhile, so emergence of the various currencies. So I have said that the dollar is utilized for the cross-border transactions. If we want to buy something, we have to pay in dollar. Okay, the India has to pay in dollars to the other countries, to any country. Okay, meanwhile, in the international monetary and the financial system has moved towards being multipolar, because now there are the decreasing share of the US dollars, and there is the increasing share of various currencies that is being utilized for the transactions. The euro came, that the euro is also very powerful currency. The other currencies like the Chinese yuan is also becoming a very powerful currency. It is also becoming the currency that is used for the trade. Okay, so the international monetary and financial system has moved towards being multipolar, that is different currencies are coming up and they are being utilized for the transactions, as reflected in the steadily decreasing share of the US dollar. So this has been mentioned in the report in foreign exchange reserves of countries. So what is happening, that the share of the US dollars is decreasing in the foreign exchange reserves of the countries. The increasing usage of other countries in the trade invoicing, in the settlement also, and the emergence of various bilateral and regional economic cooperation agreements. So this shows that there is the decreasing share of the US dollar in the world economy, and there is the demand for the other countries, other currencies to come up for the trade, for the transactions. similarly, the bilateral agreements are also happening. Like recently, a agreement has happened between India and the UAE. So between India and United Arab Emirates, there was a bilateral agreement that has happened. The MOU has been signed that the local currency settlement system will be developed. Okay, so I hope you have seen that video that I had made, the previous video. So similarly, you can understand that it is said that the rupees and the dirham should be used for the bilateral trade, for the transactions that is happening between the countries. So there is various bilateral agreements that are coming up, that is saying that okay, we should stop using some other currency, that is the dollars and such currency, and we should use our own currencies for the trade. This, along with recent geopolitical developments, has set the stage for the emergence of various other currencies, including the Indian rupees, as prospective currencies for the use in international transactions. So you can understand that there is the emergence of various currencies that is happening. These points you can write in your descriptive answer writing, you can quote in your descriptive answer writing. Now, INR. Coming to the INR, the IDG, that is the Interdepartmental Group, feels that the INR has the potential to become an internationalized currency, as India is one of the fastest growing countries in the world. If you remember, in the annual report, there was the percentage that in the past 5 years, on average, India has provided 12% of the global growth. So such a huge chunk of the global growth has been provided by India in the past 5 years on average, and has shown remarkable resilience even in the COVID-19 situation, even in the situation where the banks were falling down in the advanced countries. The India remained resilient. Even in the face of the Russia-Ukraine war, the inflation that was coming in our country, the India remained resilient, okay, in the face of major headwinds. So further, India, so it shows that okay, our political and economic system is becoming quite stable and quite resilient, and the economy can be trusted, and our currency can also become hard currency. Hard currency is the currency that is trusted all over the world and can be relied on. Okay, hard currency are usually the currencies that are issued by the developed countries or the major global powers, and they are the currencies that are trusted, like the dollars, like the euro and such. Okay, so Indian rupee can also become hard currency in the future because we have shown the remarkable resilience. India has made appreciable progress in terms of the capital account convertibility, that is the capital account convertibility has increased. So capital account means that the investment and the loan, the borrowing that is happening, so for that the rupee can be easily converted for any other currency. Okay, so global value chain integration has happened. Setting up of GIFT City, that is the Gujarat International Finance Tech City, that is the IFSC, International Financial Service Center. So in setting up of GIFT City is also showing that we are providing an international platform where the different investors can come and set up and can have the best in class services and infrastructure. Okay. The higher usage of INR in the invoicing and settlement of the international trade as well as in the capital account transactions will give INR a progressively international presence, and that is what we want. We want our currency to have the international presence, to be used in the invoicing, in the settlement, and in the international trade, as well as in the not only in the trade, that is of the goods and services, but also in the capital account transactions, that is the investment, in the loan taking, in the borrowing and such. We want the rupees to be utilized. Okay, that is what the internationalization of INR means. Okay, we want our currency to be used in the cross-border transactions for the trade purposes, for the investment and the borrowing purposes, that is in the current account transactions and in the capital account transactions. Various aspects related to the process as well as underlying factors impacting the pace of internationalization of a currency have been given in the chapter, and the IDG has talked about this in length, but I have provided you the important points that you can use in your descriptive answer writing. It is also observed that the local currency settlement system, okay, so the MOU has been signed between the India and the UAE, that there should be the framework that should be made. Okay, there should be the establishment of the framework for the local currency settlement between the rupees and the dirham. Okay, that is a AED. So similarly, it is also observed by the IDG also that the local currency settlement frameworks facilitate wider use of local currencies in the capital and the current account transactions, thereby facilitating the ease of doing business and reducing the dependence on the hard currencies, on the dollars, pounds, sterling and such, euro and such. So you can understand that IDG is also saying that the local currency settlement framework should be provided with, so that the bilateral agreements can be formed like it has formed in between India and UAE, and such more bilateral agreements can be formed so that the local currencies can be utilized and the use of the hard currencies can be can be reduced. Okay. Now, cost of internationalization. Now, it is not very easy to internationalize the currency. There are also some costs that a country has to bear when the internationalization of rupee happens. So, there is the Triffin dilemma that has to be faced by a country. Okay, that has been talked about in the report. So let's discuss that. Now, this was also mentioned in the Hindu article, I guess, when the report was being mentioned. So that's why this dilemma you have to understand, as a direct question can be formed on this dilemma also. So there are certain challenges that has to be faced when there is the internationalization of a currency that is happening, as it may result in the potential increase in the volatility of its exchange rate in the initial stages, because suddenly there is the huge demand that can come of the rupees, because the rupees is being used for the cross-border transactions. When there is huge demand for rupees, there can be the appreciation of rupees that will happen. When there is huge demand of tomato, the prices of tomato is increasing. Okay. Similarly, when there is huge demand of rupees, the value of rupees can increase, the appreciation can happen that will make our exports expensive. Or due to sudden decrease in the demand of rupees, there can be huge depreciation that can come in the rupees. So there can be much volatility in the exchange rate when we are trying to internationalize the currency, because the demand can be high and low in different times. This would further have monetary policy implications as the obligation. So monetary policy implication means that we will have to provide more and more rupees when there is more and more demand in the world economy to reduce this appreciation. Okay, so when the demand is increasing for the rupees and there is the appreciation of rupees, the value of the rupees is increasing, to control that appreciation we will have to supply rupees. Supplying rupees means that the rupees is increasing in the economy. That means there will be the inflation that can come in the economy. Okay, so there is monetary policy implication. The inflation can increase in the economy as the money supply will increase in the economy. So as the obligation to the country to supply its currency, as well as you can understand, okay, that to supply the currency to meet the global demand, because there is the huge demand of rupees. There can be the huge demand of the rupees when there is the internationalization of rupees that is happening, and to cater to this demand, the rupees will be issued. That will increase the inflation in the country, because rupees are issued, the money supply is happening, so this money is going into the hands of the people, and so the inflation can increase in the country, and it will lead to the conflict with the domestic monetary policy, because in India we want to reduce inflation. So this is known as the Triffin dilemma. That is, when a currency is going to become a global currency or going to become a global reserve currency, then what happens that the domestic policy goals and the global or international policy goals are in conflict. Okay, so Triffin dilemma is when the currency is converting into the global currency or global currency reserve, there is the conflict between the domestic policy goals and the international policy goals, because when the demand of the rupees is increasing, as for the cross-border transactions the rupees is demanded, the supply of rupees has to be increased. The supply of rupees will increase the inflation in the country, can increase the inflation in the country. So also the internationalization of the currency may accentuate an external shock, because the rupees has got such intermingled with the other economies that suddenly when there is the external shock that is coming, and suddenly the demand of rupees is decreasing and such thing is happening, so the depreciation in rupees will come, and so it will affect the India in a greater way. So the internationalization of a currency accentuate or makes the external shock even worse for a country, given the open channel of the flow of the funds into and out of the country and from one currency to another. So that will also be a cost of the internationalization of rupee further as the internationalization. But see what happens. But as the internationalization of a currency is a long drawn process, it is not like today we are saying that okay, we want to do the internationalization of rupee and tomorrow it will happen. No. Internationalization of rupee of a currency is a long drawn process involving the continuous change and the incremental progress. It would enable the timely redressal. We will get the time, it is a long term process, we will get the time to address the issues, to address the associated concerns and the challenges as we move forward. And the internationalization of rupee is needed because it will reduce the foreign currency reserves requirement for the country, as we will not require the dollars for the transactions. So there are more benefits than there are the cost, and the cost can be catered to in the long term. Okay. Now recommendations that has been given by the interdepartmental group. So you can read the recommendations. I'm just going to go like over through it because you can write it in the way forward, so you do not have to focus on this very much, just have the overview. Okay. So proposals on bilateral and multilateral trade agreement, it has been said that okay, if we want the internationalization of the INR, first of all we have to focus on the bilateral and multilateral trade arrangements for the invoicing, settlement and the payment that should happen in the INR and the local currency. The recent example is of the India and the UAE, that we should use the rupee and the dirham for the transactions so that the dollars can be taken out of the proposition. INR as an additional settlement currency in the ACU. Okay, so making efforts to enable the INR as an additional settlement currency in existing multilateral mechanism. So there is a multilateral mechanism that is present. This is the Asian Clearing Union. Okay, so Asian Clearing Union is a multilateral mechanism where the currencies, local currencies are utilized for the clearance. So we are saying, the IDG is saying that INR, it should be pushed that the INR should be added as the settlement currency in this Asian Clearing Union, facilitating the local currency settlement framework for the bilateral transactions, encouraging opening of the INR accounts for non-residents. We are not talking about the Nostro accounts or such. Nostro accounts are the accounts that a bank, a foreign bank is opening in the Indian bank. So a foreign bank, let's say XYZ, American bank is opening a account in the Indian bank of SBI, and this account of the foreign bank is actually in the INR. No, we are not talking about the overseas bank. We are talking about the non-residents. The residents, non-residents of some other country, they should be allowed to open the INR accounts both in India and outside India. Okay, so this is the recommendation of the IDG. Integrating Indian payment systems with other countries for cross-border transactions. We have made such growth in the payment system, the UPI, RTGS, NEFT. They are seen as a very respectable thing in the whole world. Strengthening the financial market by fostering a global 24/7 INR market and promoting India as the hub for the INR transactions and price discovery. Okay, facilitating the launch of the Bank of International Settlements investment pools. So the BIS, that is the bank for the central banks, that is a international organization, we can say, of the central banks. So it has investment pools. So we should push, or we should facilitate the launch of the Bank for International Settlements investment pool in INR and inclusion of the government securities in the global bond indices. FPI regime, that is the foreign portfolio investment regime, shall be rationalized and harmonized. We should provide easier norms for that, easier regulatory compliance for that. So rationalizing and harmonizing the existing Know Your Customer guidelines, providing equitable incentives to the exporters for the INR trade settlement so that they can push for the trade settlement in the INR. So these are the recommendations for the short term. For the long term, for the medium term, the recommendations are that the review of the taxes on masala bonds should happen. Masala bonds are the rupee denominated bonds issued outside India by the Indian entities. Okay, so on this, the review of taxes should happen. We should give some rebate kind of thing so that this masala bonds can be made more popular in the world, in the global market. International use of the real-time gross settlement. So real-time gross settlement provides for the real-time settlement of the huge amounts. For the cross-border trade transactions, we can use the RTGS and inclusion of the INR as a direct settlement currency in the continuous linked settlement system. So continuous linked settlement system has 18 currency for now for the transactions and for the trade settlements, and it is said that we should push for the inclusion of the INR as a direct settlement currency in the continuous link settlement system. Examination of the taxation issues in financial markets to harmonize the tax regimes of India and other financial centers. So we want that the financial markets, we should examine the taxation in the financial markets so that the tax regime can be harmonized. The harmonization means that tax regimes should be made easier for the foreign people, for the investors, so that they invest more and more in India, allowing the bank services in INR outside India. So right now what happens that the Indian banks, they are able to open their subsidiaries in the foreign countries, but they are only allowed to use the foreign currencies if they are in some other country, or they can use the Indian rupees but not to a great extent. So it is said that we should allow the banking services in the INR outside India also through the offshore branches of the Indian banks. Okay, so the branches of Indian banks till now, they were not able to use the banking, they were not able to provide the banking services in INR to such a great extent, but now we should allow that. Okay, so this was all about the IDG, the interdepartmental group that has provided the report. And I hope you have understood everything very clearly. You can use the points and be very careful, and you can use all the points somewhere or else. Okay, or direct questions can come from this report directly. Okay, so the internationalization of INR is not a new topic. It is not like that, okay, today the RBI has released, or in this month the RBI has released a report and the RBI is focusing on it. No, the special rupee Vostro account that we have discussed in the past, this was released in 2022. So from 2022, even from 2021, the RBI was thinking of the internationalization of the Indian rupees. So you can understand that it is a very hot topic and it is a very important topic. You should have the good understanding of this topic. Okay, and the recent step that has been taken by the RBI is to release the report on the internationalization of INR. So this is the first question, okay, that you need to answer, that which of the following visions of the Utkarsh 2022 the report is based on. Next question is regarding the chairmanship of the IDG. So I hope you will be easily able to answer this question, and you can use the points that have been mentioned in this session in your descriptive answer writing practice. And before going, a big announcement from EduTap that we have brought for you the comprehensive guide for RBI, NABARD and SEBI, so that through a single guidebook you can get all the information regarding the examination. If you want to know about the syllabus, if you want to get the previous year questions for your practice, for your understanding, even if you want to know about the sources for the examination, everything has been provided in this single guidebook, and you can easily download this guidebook. The link is provided in the description box below. So register yourself and get the guidebook. Okay, and this is absolutely free of cost for your understanding, for your saving of the efforts. Okay, so thank you very much, and if you have any query, you can write in the comment section, and you can mail us here or you can contact us through this number. Thank you very much everyone. Have a good day.